This year started off with 6 immediate trades, 3 of which we discussed in full in the previous episode. Here are the remaining ones. In the previous episode, we kicked this year's trading action off by presenting 3 brand new trades. Let's now continue with the remaining ones. We'll cut straight to the chase, but before that, and as always, not financial advice, and if you appreciate this episode and if it helps you better understand trading and the market, then please drop a like and subscribe. This frequently recurring old favorite of mine has just broken out of its 2-year descending channel. It did so already in September, however that attempt turned into a nasty fake out that likely cost a lot of people a lot of money. Patient people who thought this was finally it. Instead, and with heavy red trading volumes, those dreams and hopes were quickly shot down once again. Now we might just be in for that second attempt. And as we can see, the price is now trading within a new channel, this time an ascending one, which is bullish. And of course, anything can still happen. The biggest threat at the moment were to be if the indices decided to swiftly turn on us. However, and this is the beautiful part of trading, then we have a stop loss in place to cut the losses short. In this sense, and just as in AAC Clyde space, upon any closing back in the descending channel, I will drop my position in a heartbeat. As I enter my position at 1810, this amounts to some very interesting risk to reward spots. It doesn't really matter what the targets are, for the stop loss is just so tight. But reasonably speaking, if this breakout were to be one of substance, then a gradual move towards the upper level of this ascending channel would be expected at some point. But to stay safe, I will release an initial 25% of my position at 2150 to secure profits, as this level makes for quite a strong horizontal resistance. However, if this were to be the long sought after breakthrough after 3 droughty years of accumulation moves, then I don't expect much resistance at all until much further up. For detailed technical analysis on Fingerprint and its longer-term technical targets, please watch these episodes. As the risk to reward is clearly attractive, my Fingerprint Cards position now amounts to 11% of my portfolio value. Although this one's not a new position at all, I still want to give a quick update on it. I still believe Realfiction has every possibility to make that strong northbound rally that we discussed in detail in these 2 Realfiction episodes. However, as much of my aggressive and opportunistic guerrilla strategy was based on an immediate counter reaction, and since I was very heavily invested to seize any such opening, I decided to scale down my position by 40% to minimize my risks, as the desired outcome didn't play out in due time. My remaining 60% still amount to 29% of my portfolio value, which should be proof enough of my technical dedication. This is how I currently see it. The price is holding up the support box well, and the further we go into it, the lower the trading volumes. These together are a good sign, especially since the trading volumes are close to negligible. I have seen this many times before, and speaking from experience, whenever a stock busies itself in boring its stockholders to death, it is in those seemingly calm waters that big moves lurk about, ready to strike at any moment. This is well depicted as well by the Bollinger Bands, which have contracted significantly. For that reason, I'm not going anywhere. Everything I've said in the previous 2 episodes stand. The only difference is that the move will most likely not be as steep as it would have been if it were to have played out right upon the time critical level of hitting the cluster of supports back in November. In that sense, I still see the same upside potentials, although stretched out over a longer period of time. I bought this stock simply because of one reason, which alone amounts to an attractive risk to reward. Looking at the log scale, which is the only relevant approach for a stock that has moved as much as SpectrumOne has, the stock is trading right at the diagonal support. And to those of you who follow this channel regularly, you know I normally don't base any decisions on those lines alone, but in this case it's in fact a bit different, as the line in question is a primary trend line. It stretches over a long period of time and has been respected on each and every occasion so far. We have no reason to suspect this time is any different. Of course, as mentioned in previous episodes, the more times a trend line, or a support or resistance line too for that matter, is tested, the weaker it gets and the more violent the forthcoming move tends to be. But until proven wrong, I will seize this moment to go long, as it offers quite a fancy risk to reward. Now, here's how I'll play it. Any closing below this diagonal trend line will automatically trigger my stop loss. And as I got in right on the line at 3 kroner, that stop loss is tight. Looking at the weekly, it would be more than fair to assume that a bounce would leave us somewhere around the previous top and the all-time high area at 450 for a 50% profit. Given the area of our stop loss, this in turn means that our risk to reward is roughly 8 to 1. Now that's a swing prospect I like. I will release most of my position at that point, but if the price were to break above this resistance level, then things can move fast. That's where the real fun begins and would be perfectly fueled by any across-the-board parabolic index moves. Time will tell, but until then I certainly like those 8 to 1 odds. And given those odds, SpectrumOne now constitutes 7% of my portfolio. The only thing that held me back from adding more was the painstakingly weak short term, which may cause me to get stopped out faster than fast. The hourly RSI is horrible, absolutely horrible. Even if the probability of a bounce up were to be just 30%, the true odds would still amount to 3.4 to 1, which is more than we can normally bargain for. I like what I see, so let's now see how the rest of the week unfolds. That was all for now, thank you and goodbye.